Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets. As always, not investment advice, but we'll be talking about the markets. And for those who prefer to read, you can check out our blog on our website, ar.ca/blog. Check out That's Our Two Satoshis. Actually, before I get started, for those who follow me on Twitter as well, I spend a lot of my time not just investing across our multiple funds at Arca, but also teaching and educating people about crypto as an asset class, as an investable asset class. I actually put on Twitter just today sort of the idiot's guide to investing blockchain, or sort of like a 5-minute explanation of what I've had the most success with over the years, pitching and explaining blockchain as an investable asset class. Would love some feedback on that. Try it out on your friends, family. Certainly as crypto becomes more interesting here, would love more of the investable universe, or rather more of the investors out there to take this industry seriously and basically ignore and forget almost everything they've been taught by some of the largest exchanges and VCs and media folks out there, who I think have done probably more damage than good when it comes to education and understanding of the space. So check it out if you can. But this week specifically, Bitcoin again hit all-time highs briefly. We seem to continue to kind of just bump up against all-time highs and then get slammed back down at some point. I actually put out there a week ago, I said, the only time I buy Bitcoin is when society loses faith in governments and local banks. And Bitcoin is likely a good buy here ahead of yet another U.S. government shutdown. So as a result, it didn't shock me that Bitcoin rose almost 10% to all-time highs only a few days after I wrote that. I don't think I was entirely right, truthfully. Bitcoin didn't rise in a vacuum. If I were right that it was just related to the shutdown, I think Bitcoin would have been one of the only assets up. But Bitcoin didn't rise in a vacuum, right? Gold continues its march towards all-time highs. So did equities. Many other large cap crypto assets, especially some of the Asian related tokens on the Binance Smart Chain, rallied as well. So this was really more of an everything rally than it was just a Bitcoin specific rally. But it is related, right? It's related to the government shutdown. It's related to the fact that President Trump kicked off the Wall Street's new favorite term, debasement, last week, after stating that the only way out of the debt spiral is to grow your way out of it. And Wall Street, rightfully so, took that as a cue that you have to own inflation-protected assets, which is Bitcoin, gold, equities, and to some extent crypto. Otherwise, you'll be left holding worthless fiat as the government inflates its way out of these problems. So this isn't a new concept. We've written and talked about this many, many, many times over the last 7 years, about how Bitcoin really only responds whenever people lose trust in their local governments and banks, right? It's not a market hedge. It's not a safe haven against market disruption. It's a safe haven against loss of faith and lack of trust in local governments and banks. So, we can certainly add Bitcoin rises when the government shuts down and the president explicitly states that there's no way off this debt spiral other than currency debasement to the list now. But it's the same story over and over again, right? Cash continues to be trash. You have to invest. There's only a certain amount of assets out there that really protect you against currency debasement. Separately, obviously, again, the market's kind of selling off a little bit today, but it's been another good week for the markets, especially across crypto. As we've noted hundreds of times now this year, this is not a broad-based crypto rally that people are used to. There's no such thing as 4-year cycles. There's no such thing as alt season. But select assets are continuing to do well while others are really doing poorly. But one of the things part of the reason I think that here in the U.S. at least, crypto investing is just not nearly as in vogue as it is overseas, is that again, the leaders of the crypto investing world here in the U.S. are largely doing their customers and their investors a disservice with the way they position this space, right? There's a reason that crypto stocks are doing way better than tokens this year, right? The equity market does a much better job of writing research, educating their customers, understanding that stocks often, go up and continue to go up as profits grow. That's why you're seeing things like Robinhood stock and Galaxy stock and Iris Energy and Circle to some extent. You're seeing all these crypto stocks do much better than tokens. It's not because the businesses are necessarily better. In fact, I would argue that they're not, right? Look at things like Pump.Fund and Hyperliquid and B&B and some others. These are businesses that do way better than all those stocks that I just mentioned. But the equity world is just conditioned to invest for the long haul and to understand what they're investing in. The crypto world is the opposite, right? And a large part of that is because of places like Coinbase, who I've picked on over the years and will continue to do so, because I just don't think that they are doing as much as they could to educate their investors, right? They continue to just focus on their venture portfolio and their venture buddies and custody, and yet majority of their revenues still come from retail trading. Yet if you go on their website or you go on their app, they just don't do anything to help people understand that you can own a token for the long haul. You don't have to trade it every tick. You don't have to believe in 4-year cycles, and you certainly don't have to compare a meme coin to Bitcoin to a layer one protocol to a profitable company like Hyperliquid and Pump.fun. So I don't hate Coinbase at all. I think there's some things they do well, but I think we're certainly not shorting the stock, right? I don't really care one way or the other. I have no skin in the game with whether or not Coinbase as a company succeeds or doesn't. But I do really have a problem with the fact that they are still generating majority of their revenue from trading, and they do nothing to help the investors and their customers who are trading and investing in this stuff for for the majority of their crypto experiences. And what I mean by that is you look at what Coinbase actually lists, and they list some of the absolute worst assets ever created while ignoring the best ones. And that's a real problem, right? If you call yourself an exchange, your goal should be to list every asset and be neutral. Well, that's clearly not what they do. They don't list everything, and they certainly are not neutral. If you call yourself a broker, then your goal should be to list and trade the best assets and help your customers make money and write research to educate your customers. Well, again, that's not at all what Coinbase does. The majority of people on Coinbase lose money. So Coinbase is out there calling themselves an exchange, yet they list the worst possible assets that are almost guaranteed to lose their customers' money, due both to poor inflationary tokenomics and also just a horrific listing process where they purposely allow market makers and token issuers to price assets way too high that are destined to fall. While pretending to be neutral, even though they write research all the time, they just write it on the worst assets. Really, Coinbase is just a bad broker. They could just do so much better. Many of the assets Coinbase refuses to allow its customers to trade are actually the best performing assets in history. Look at the charts of Leo, which is Bitfinex's token, or BNB, which is Binance's token, or Tron, TRX, or Hype. All four have pretty much gone straight up and to the right since tokens have launched. And all four are tokens issued by other exchanges or stablecoin platforms that compete with Coinbase in some way. They all have incredibly strong tokenomics, using a large part of their revenues to buy back tokens. It's just criminal at this point that Coinbase refuses to let their customers own the best assets out there while continually listing just these meme coins and nonsense inflationary crap that goes straight down. And if you're going to say that's because they don't want to help their competitors, well, that's not a good argument either, right? Banks and brokerages allow you to trade their competitor stocks, right? I can go to a Merrill Lynch platform and still buy JP Morgan stock, right? I can buy Bank of America stock on Goldman's site. Coinbase won't let you trade any competitor tokens on their platforms. But even that's not 100% true, because they let you trade Aerodrome, right? Aerodrome is obviously an exchange as well. But Aerodrome, of course, is largely Coinbase Ventures is Aerodrome's one of Aerodrome's largest investors. So again, this is a purposeful, selective process, and it's really, really hurting their customers. So, worse, I would say that, wouldn't you want your crypto customers to learn about these quasi-equity, quasi-loyalty reward tokens that have actually good tokenomics rather than the predatory and inflationary L1 and L2 tokens that go straight down? Wouldn't you want to write research on incredible growth stories? I mean, there's no businesses in the world that have grown faster than Binance and Tether and Hyperliquid and Pump.fun. I mean, these are multi-billion-dollar entities that have grown faster than any other companies in history. Yet there's no research, there's no talk about these. Wouldn't you want to help your customers understand tokenomics and understand the difference between, a company that buybacks tokens and basically has an amortizing supply schedule versus these inflationary spirals with massive VC unlocks before your customers just blindly go and trade this stuff? So I guess not. I guess that's not what they care about doing. So, recently, for example, I saw the CEO of Bitwise, who I actually respect a lot. He tweeted the other day that more and more investors are asking about revenue as a metric for evaluating crypto assets, as if that's some sort of amazing discovery. Like, are you kidding me? I would have rewritten this statement as, yeah, obviously revenue has been and always will be the most important metric for investing, whether that be in stocks, bonds, or crypto assets. It's downright criminal that it took so long for some crypto investors to realize this, because they've been purposely hoodwinked by exchanges like Coinbase and their VC media and influencer cronies. Basically, they've been tasked at obfuscating the truth with made-up metrics that help their business but hurt their customers. So yeah, look, token investing has evolved for the better. Yes, Bitcoin was first. Yes, Bitcoin has no revenues, but Bitcoin is probably the biggest anomaly in the history of investing. Its success is miraculous. It's one of a kind, and there's no reason to study this or apply it to anything else. The market has evolved. Tokens have evolved. Companies have evolved. Yet Coinbase and others are still profiting off of the ignorance of their investor base, who still compare Bitcoin and Ripple and meme coins to everything else. There's no reason to market the horse and buggy when the SUV exists, while purposely steering unsuspecting customers towards the wrong assets. So it's a shame. I have no axe to grind with Coinbase as a stock. I don't care. They have a lot of other businesses and things that are doing, but look, if you're going to be $100 billion company in this space and you're going to be a leader in the space, do it better. Do it way better. I have no regret pointing this out until it changes. What you're doing to your customers and what you're doing to this industry is more harmful than anything that you're doing well. And it's an easy fix. Just start separating the good assets from the bad assets. So that's it. As you can imagine, in a down trade today, some of the assets I'm talking about are the ones holding up the best: BNB, Leo, Hype, Pump. There's a reason for this. They're better designs. They're better tokens. They're better companies issuing the tokens. Stop blindly logging into some of these sites and just buying what they show you on their front page, and start doing the research and looking at what else is out there. And hopefully with messages like this, we can get the industry to change. So that's it for this week. Hope for better price action next week. We'll be back again. That's our 2 Satoshis. Thanks, everybody.